Hi, this is Michael Rony Mullick, and you are watching the post market show. And the markets, it was the first week, the first day of the July series, and the markets have been extremely volatile. And the major news is the government imposing a windfall tax on the crude oil explorers and the crude oil, the companies which deal in crude oil. So obviously Reliance Industries, ONGC, they are the ones who's majorly hit. So the government has imposed tax. This is not the first time the government is doing so. This is was already done by the governments of UK and Hungary. So Indian government have stepped in and done the same thing because they were seeing that these industries were making an unusual amount of profit because of the rising in crude oil prices in the global markets. So the government had to step in and impose this tax, and obviously it is not good for the company because they cannot enjoy these profits anymore. A part of it has to be shared with the government as the tax has been imposed. So that is not looking good for the companies like Reliance, and it has been sold off heavily, and Reliance alone is has a weightage of close to 12% in Nifty, and it has fallen close to 8% at one point of day. So that has dragged the Nifty down significantly, but thankfully the Nifty recovered throughout the second half of the day, but Reliance did not recover much from its bottoms. So talking about the nature of the taxes, how much is it? So that is 6 rupees per liter of petrol and 13 rupees per liter of diesel is the tax they have to pay, and on top of that there's an additional tax of rupees 23,250 per ton of domestically crude oil that is produced. So any crude oil that is produced in the domestic oil fields, they have to pay to the government additional 23,250 per ton of that. So that is the news, and obviously it has shocked many investors, and they have sold the shares, and especially I think the foreign investors have sold drastically. So we will be coming to that as well. So let us look at Nifty's movement for the day. So let us look at the 5-minute chart. So Nifty opened with a gap down as expected because the global markets were slightly trading negative, and then the news of tax being imposed hit the markets, and from that we see a steady sell-off from 9:35 to 10:15. The market made a panic low of 15,511. So talking about the quantum of the fall, so from yesterday's closing, market fell close to 1.4%, and from there it recovered significantly. So the recovery was even better. It recovered almost 1.8% from there. So Nifty, it recovered, although it recovered very strongly, but it managed to still end in the red. So it is down by 28 points or 0.18%. So Bank Nifty did not have that much of a problem. Bank Nifty opened with a gap down, tried to stabilize in this area till 10:30, and when Nifty started to move up, Bank Nifty followed suit, and it moved up quite a bit. It took resistance at 33,600 levels. So Bank Nifty is up by 0.3% or 114 points. So Bank Nifty has ended in the green. Nifty mid cap, small caps all have joined the rally. Mid cap up by 0.5%, Nifty small cap up by 0.21%. So coming to sectoral indices, all the sectors ended in the green except for the energy sector. Obviously, energy sector is under pressure. It is down almost close to 4% is what we see. And other sectors, the best performing sector today is the FMCG. Nifty FMCG up by 2.8%, and that has been led by ITC. So we'll come to ITC as well. Other than that, Nifty Reality is up 1.5%, and also other stocks include Nifty Financial Services, which is up 0.95%. So Nifty Bajaj Finance, Bajaj Finserv, both of them are up. That has actually dragged the Nifty Finances up as well. Okay, let's talk about activities in Reliance. So you can see Reliance, a sharp fall happening right after 9:30, and then all hell broke loose. The markets fell almost close to 8%, and then it recovered slightly, but again near 2 p.m. there was another second round of selling in Reliance. So finally Reliance ended 7.2% in the red. So that has definitely contributed in Nifty on the downside. Talking about other companies related to crude oil, like ONGC down by 13.5%, Oil India down by 15%. So that is huge, absolutely huge in terms of the amount of sell-off happening in one day. So that is there. Coming to other stocks, we have ITC. It is now at a 3-year high. So let me open up the weekly chart and you will be seeing when was the last time the markets were at this level. So let me go back 3 years, and you can see around 1st of July 2019 it was at this level. So that is exactly 3 years before. So 3 years before 1st of July and today, so after 3 years the markets have recovered its fall. So during the COVID crash it had fallen to a low of around 135 is what we see. So good to see ITC moving up. It is a very strong company. Fundamentally it has a very good dividend. It's a high dividend paying stock, and it is one of the investors favorite stocks, and also in the FMCG sector, which is a defensive sector. So overall it is good to see Reliance moving up. A lot of investors would be very happy who has been holding ITC for a very long time. It moved up with good amount of volume is also a cherry on top. So that is ITC. So ITC is up. Talking about Zomato was falling constantly, but finally it is up today 4%. So that is also good to see in Zomato as well. Okay, talking about index movers, we see ITC contributing positively 22 points, almost close to 22 points in Nifty alone. It is up 3.4%. Then we have HDFC, which is up 1.8%, Infosys, TCS, Bajaj Finance, Hindustan Unilever. So we see FMCG, IT and financial services dominating the Nifty index today. But the draggers was definitely Reliance. It alone dragged Nifty close to 147 points. So it if this was Reliance did not fall, you can expect the market to have moved up another 150 points today. So that is the impact Reliance has on Nifty. And so Reliance top dragger, definitely ONGC is the next one to drag Nifty down. Bharati Airtel, ICICI Bank, Power Grid. So these have actually dragged the Nifty today. Okay, these were the Nifty movers. Let us talk about FII, DII buying and selling activities. FII continue to sell for close to 2,324 crores. So they're again back to selling in huge numbers, and definitely they could be the reason behind Nifty falling so much, especially Reliance and other stocks. So again, they have sold for 2,300 crores, and DIIs have bought for 1,310 crores. Then let us go into the open interest and see how the OI has reacted today. So this is the Nifty chart. So Nifty, after it recovered sharply after its fall, we see good amount of put being added, and finally the PCR, the put call ratio, is above 1, which means the markets are slightly bullish is what we can expect. So good to see the bulls are still in control. So no matter how many times the market is falling, the bulls are picking the markets up. So it is good to see that markets are creating a range. So the longer the range, the stronger is the breakout. So let's hope the markets break out from these levels. So Nifty on an intraday basis, we see good amount of puts being written across board, and on the put side we have 15,500 as the highest amount of put OI. On the higher side we have 16,000 followed by 15,800 as the next two levels of strong resistances based on the levels. Okay, let's talk about Bank Nifty. Bank Nifty, again things have changed a bit, and Bank Nifty is looking also strong. When the Bank Nifty, when it recovered, people have sold a lot of put options at 33,000. It has on intraday basis and on an overall basis, 33,000 has the highest amount of put build up in Bank Nifty. So it is also looking bullish. PCR is at 1.07. And on the upside, we have 34,000 as a next level of resistance that you can watch out for based on OI data. So this was the OI activity for the day. This is for 7th of July. So there is Monday, Tuesday, Wednesday, Thursday, 4 days of trading activity left. So this is how the situation is looking right now. Okay, so let us come to the next segment, which is the European markets and the US markets. So European markets, let us look at how they have traded today. European markets, let's open up the 5-minute chart, and then we will see. Okay, German index up by 0.2%. So German index, we can see it was hugely volatile today. It shot up, it crashed, again it shot up. So finally it is up 0.2%. French index up 0.14%, and UK index up 0.34%. So all the European stocks are up. It is good to see. And then we have the US index as well. US index today had fallen again significantly, but then it is recovering from those levels is what we are seeing. So US markets now, the Dow Jones and S&P 500 is up by 0.2 and 0.3 percentage, but Nasdaq is slightly down by 0.2 percentage. So all the markets are recovering globally. It looks like the bears are trying to get back in control. The bulls are trying to get back in control because no matter how much the market is falling, they are trying to pick the markets up. Let's see how much momentum they have left, and because markets have many levels of resistance on the upside, and they have to break multiple levels of resistance to move up. So US markets trading almost flat is what we can see. So even SGX Nifty is indicating almost a flat opening. 15,755 is what it is showing in SGX Nifty. So nothing major to talk about there. Talking about the currency, we have 105 as the dollar index. So dollar index is again at that the same 104, 105 levels, nothing major. US dinar made again a new low today at 79.13, but then it recovered from there. It is at 78.9 at present. Coming to the crude oil prices, it is hovering around $108 per barrel is what we see. So it is moving violently between $104 and $113. So let's hope it stabilizes somewhere there and it falls down, because that is important. Okay, so this is the crude oil prices. So nothing major happening in the commodity prices as well. Coming to economic calendar, we have two important data. One is the South Korean exports data, which is at a 19th month low. So you can see this is the data for the last many years, and you can see that it is for the last 19 months. This is the lowest. It came at 5.4% increase in the exports of South Korean. So that is 19th month low. So that is not a good figure. And then next up, we have the European inflation data coming out for the month of June. Expectation was 8.3 to 8.4%, but it came at 8.6%, which is above last month's, which was at 8.1%. So we are seeing inflation data every time it is trying to make a new high, and that is also not good. So historically, I think this is the highest in the last 50 years. So European inflation is on the higher side. So the risk of inflation has not gone completely out of the markets. It is still there. So let's see, next week we have the FOMC meeting as well. So we will be talking about those things as well. So let's join in for the Sunday's week ahead show, so where we discuss the important levels to watch out for the next week, and also the important data which will be coming out in the coming week. All of those will be discussed on the Sunday's live show. And along with that, I should tell you that on Monday, the US markets are closed because 4th of July is Independence Day celebration at the US. So the markets will be reacting to that only on, markets will be open on Tuesday. So the reaction we will be having in Indian markets is on next Wednesday. So that is for your information. So with that, let's end the post-market show here. I hope you have a happy weekend, and thank you for watching.